Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, January the 3rd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember, the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on. Got a lot of stuff to go over today with the economic data and what I've done in the overall markets. But let's get to the economic data first and get that out of the way. Across the pond, we got German unemployment change came in at 29,000, expected to be, negative 29,000, expected to be a negative 13,000. So unemployment change good on that front, less or more negative is good on that front. And then they revised last month's number as well. Then in Great Britain, we got construction spending coming in at 52.2. Construction PMI, I should say, Purchasing Managers Index came in at 52.2. Expected to be 52.8, so slightly lower than expected there, but pretty much in line with expectations. Remember, anything over 50 on these PMI numbers is expansion, so that's good. ISM here in the United States, which is the Institute of Supply Management Manufacturing, PMI came in at 59.7, expected to be 58.1. Much better than expected, almost up into the 60s on that one as well. We got construction spending here in the United States. Came in at 0.8, a little bit higher than the expected 0.6, but last month's number was revised from 1.4 down to 0.9, so a big revision down there, not so great. Here in the United States, we also got ISM manufacturing prices paid came in at 69.0, expected to be 64.8. Higher prices kind of assumes demand. So when you got more demand, you're going to have those prices start to go up from those manufacturers. Plus, we're also seeing some of the inputs going up higher as well for those manufacturing, which is going to cause that number to uptick. And then all day throughout the day, we have vehicle sales being released from all the different manufacturers. That's just kind of a flyby throughout the day to figure that one out. And then finally, we got at 2 p.m. Eastern, the FOMC meeting minutes. So that, I think is pretty much already out there, all the information for that, but people are going to be, counting every single word in those minutes to see what has changed. All right, on to the overall markets. We've got, excuse me, I got a tickle in my throat. We have crude oil inventories moving higher again today by another $1 up into the 61 handle, looking to test this trend channel upper band, which is going to act as a bit of resistance on the way up there. So keep that in mind. And as we go along, this is going to even act as more resistance up here at the $62 level. So $63 level. So that's going to be something to really keep your eye on. Then I've added something dealing with crude futures that we'll talk about here in a minute. We've got gold futures up again today by about $1.50. It is testing the 78 Fibonacci level at 1322 area. It has acted as resistance, as it should. I'm really thinking that gold needs to kind of turn around here. It's just gotten a little overdone to the upside, especially the way the equities are looking right now. I think that people are going to need to be pulling some money out of gold and looking to invest that in the market. So I see gold, but I've been a little bit early on a lot of things lately. Gold futures think are going to come down. I have a position on about that. And, if you remember that TLT trade that 2 days after my options expired, that went my direction as well. All right, Bitcoin futures. Bitcoin futures up only $75. It seems like that could be a big move in any other market, but Bitcoin futures, that's unchanged for all intents and purposes. With that being said, let's move on to the bonds. Bonds up 13 ticks, almost a half a point right now. They were up 17 when I just started, so that was right around half a point over all market in this. Again, it's kind of like gold. I think gold's going to go down, and bonds need to come off a little bit. They might see a little bit more downward pressure after those FOMC minutes are released as well at 2 p.m. Eastern. With the equities up, we would expect that VIX is down, and that is the case. It's very near its lows. I mean, we did get down into the 8 handle here, but this is going to probably act as a bit of support down in this area here first off. But, you know, with the equities making all-time historical highs, that's really just, loss of words here, obviously, but there's no other direction really than down for VIX right now, the way that the market strength is. Then we've got the Dow Jones Industrial Average up almost 67 points right now and has a new all-time historical high. You know, if we get another 100 points and we are in the 25,000 handle. Here we go with the NASDAQ up big today, 72 points. Obviously a new all-time historical high above that 6,500 area. And then we look at the E-mini S&Ps, and I talked about this over the overnight session, printed a historical high, and that was just a thing that was going to have to be printed in the day session. Here you see we are up to 70 or 2711.5 as the new historical high, which was basically just printed. As you can see, we are on the highs of the day right now, with that being printed inside of this bar chart that we are currently talking about. So new all-time highs across the board in the equities there. On to a few things that I've done. Philip Morris, I've been talking about this. It seems like since I blew in the face on this one. But if you remember with Philip Morris in my account, I did a spread with this. So having said that, the spread, I only covered the puts on this. So I just am going to let the other part of it expire on this Philip Morris trade. And if you remember, I have on the Philip Morris, I had on the, I'm going to have to think about this for a second. I have on the 65 puts. So I had on the, that doesn't seem right, 90 is what I wrote down. So I short the 90 puts, long the 65 puts. Sorry about that. And they were in the January. I originally sold those for 30 cents, bought back the short 90 puts for 7 cents. And we've got a dog busting in the door there in the background. So Philip Morris covered that yesterday, close to the end of the day there. And then on to a couple of things that I've added to my portfolio in the margin account. I didn't do this in my IRA, but in my margin account with Gilead Science, you know, it's made a big move to the upside. It's kind of right there in between the 50 and the 200 day. It's right there at the point of control, all those things lining up. I think it's going to settle down here. So decided to take advantage of some high implied volatility in the January because we've got the earnings coming up in that February cycle. So I wanted to stay away from that and just sell some vol, if you will, and collect a premium. So I went into the January, sold the 77 calls for 48 cents in there. So I think it's going to come back down, settle down right there at around that point of control, at least going into their earnings. So I think that's going to settle down. Nvidia, I finally pulled the ripcord on this, busted above the 50-day moving average, and it's up like, you know, it was up $9 when I got out of it. So, you know, it's continued to just lockstep go higher, especially with the NASDAQ being higher. I'm just a little early on Nvidia. I think that I still think that Nvidia is going to go down because Bitcoin is moving to the cloud. So that's going to hurt Nvidia, but I'm just probably a little bit early on that call as of right now. And I had on the February was long the 185 puts in there, originally paid $9, got out for $2.86. Sorry, it's kind of like it's live right now, you guys, with the dogs going crazy in the background. I can't stop that. So, and I got to get this video out. All right, Costco. Costco is a trade that I covered for a profit. And in Costco, I had on the January, was short the 177.5 puts in there. Originally sold it for $1.01, bought them back for 27 cents today. Nice big move today with Costco being up over $3.60. So nice move. volatility didn't really come out for me like I'd like to see it, but I got that big directional move, which helped out quite a bit. And this was acting as such support here that I had to go in just below that and collect a nice premium for it. Now that we're bouncing away from that, that was a nice little trade there. All right, then on to Apache. This I added in both my IRA and in my margin account. In my margin account, I did it like a synthetic short put spread, synthetic short put in a sense, because I made that put spread really wide. It doesn't follow those rules of a third the width of my spread because I'm trying to just buy that first option for a nickel to just limit my margin in my IRA, because they crush you on margin in your IRAs. So in my IRA with Apache, I went into the April contract and sold the 37.5 puts for 37.5, 27.5 put spread in there for 65 cents. And then over in my margin account, I went in there and sold the April again and sold the 37.5 puts for 69 cents. So I think Apache is going to start moving up, especially with oil going higher. They are entrenched in oil, so that will do well for them going forward. I think all the bad news is behind them, with almost a 50% cut in their stock price. I think it's a little overdone to the downside, especially with oil moving higher. So I decided to add some long deltas with Apache in both my all my accounts there. All right, that's about it for you guys today. Oh, wait, one last one. Verizon. I did forget to print up on Verizon with that I got out of today in my IRA. Now, if you remember, in Verizon, I had on a spread similar to what I've been talking about with the other trades, because it's in my IRA. I had to make it as a spread in there. And with Verizon, I originally had on the January was short the 55 calls, long the 59 calls, just to define that risk. Basically paid a nickel for those. They're worth a penny, so they're not really worth getting out of at this point, right? For the commissions and everything else, I might as well leave that on as a free trade, the way I look at it. And I originally sold that trade for 29 cents, bought back just the 55 calls for 7 cents. So a nice little profit there. I'm just going to leave on those 55 calls. I don't think anything's going to happen there, but at the end of the day, stranger things have happened. So down move today in Verizon allowed me to get out of that trade as well. And that's about it for today. Friday's webinar is going to be on the collar. That's a really good one, especially if you have stocks in your overall portfolio. You've been buying puts. Basically, if you're just buying puts to protect some of these gains that we've seen, at the end of the day, you're increasing what you paid for that overall stock. And I'm going to show you how to limit that outlay of money, because you don't want to increase your basis. You always want to decrease your basis. So I'm going to show you how to set that up on Friday. So go to protraderstrategies.com and check that out. If you can't take that, take it easy.